Thank you very much, everyone. Our next panel is about finance, and I would like to invite to the stage Jennifer Power, who is a partner in the SME department of Fitzgerald Power. And we have Alison Cowzer of East Coast Bakehouse, who is a serial entrepreneur, also a podcaster with The Currency. And finally, we have Niamh Sterling, who's on the All Ireland Director of HBAN and on the board of BVP, and she's also a serial entrepreneur. Welcome all three of you. Great to see you here this evening. I'm just going to kick off maybe with yourself, Jennifer, and just ask you about, what are the typical finance function challenges you're seeing when you're dealing with high potential startups? Like, what are the things that people are trying to get over?
Thanks, Tom. I think we see similar challenges again and again. And with startups and scaling companies, what I come across a lot is the business owner and maybe the management team as well. They may underestimate the value that a really good finance system can bring, and maybe they don't understand that return on investment. They tend to invest in the early days in sales and product, and that can bring challenges. Mainly management information. So your internal financial monthly accounts can be more reactive rather than proactive. And by that I mean there could be delays in that information coming to the management team, or maybe over a period of time the team realise that the information isn't 100% reliable. And that can certainly bring its challenges, especially when scaling companies need to make decisions quickly, and they have to rely on instinct and not real data. And the third one that I see a lot is that the team or the business owner struggles with scenario planning. So properly forecasting your base scenario, your mid scenario, your best case scenario, and mapping that out over a period of time. So those three are the main challenges that I see again and again with clients that come into us.
And Niamh, with HBAN and BVP, you're looking at dozens, maybe more, companies every year who are high potential startups. Do you think that finance is one of those areas that is sometimes neglected? And how important is it to you when you're looking at a business and deciding, are we going to risk putting some money into this?
Yeah, absolutely. As Stuart said it at the start of the video, he said, finance can be an afterthought. And that's definitely something that we see. I would say that finance and probably go-to-market are two of the lightest areas that we see, because a lot of it is guesswork at the early stage. But, when a company comes into me, what I'm looking for is I would like to understand that they understand what they need to know. So if a company is coming in, they're looking for they're looking for funding from investors. I'm looking for them to be able to say to me, well, look, we're firefighting at the moment. Here's where we are today. We know where we're going to get to in terms of finance as a decision-making strategy, and then being able to do a gap analysis on it and figuring out actually how do they need to go from, firefighting to finance being a strategic decision for them and an evidence-based decision for them.
And Alison, from a finance point of view, I mean, you've seen it both as an investor and as an operator of a business. What would you say the key lessons is you've learned about finance?
I think the main issue really is that the set of numbers means nothing unless you're really clear on the context of it. So very often SMEs view the numbers as simply, counting in relation to the progress of the business. But it's hugely important to turn that 360 degrees and view your business as an investor would view your business. So it's not about simply running the day-to-day operation. It's about being really clear on what are the KPIs that an investor is going to look at. It's almost like being IM ready all of the time, and an IM as in an information memorandum that is the document you will put together when you get to the day when you decide you want to sell your business. It's trying to imagine that IM all the way through, so that are you actually in a position to develop the information from that on day one, if you can. Well, maybe that's a little bit ambitious, but certainly trying to retrofit what an investor might want from your business, 3 months before you want to sell your business is too late. You need to be building that data bank. You need to be building the and forming your decisions in a way that means that's natural and that's how the business is run, so that when you do go to put the famous IM together, and anybody who's involved in putting them together or has had that challenge, they get easier on the second or the third one. The first one's really hard, and you're trying to figure out, what does an investor want from my business? What would it look like? How do I, horrible word, groom the business? How do I present the story in a way that will build shareholder value? And ultimately, to me, the best finance function is the one that builds shareholder value by presenting the story in a way that's obviously interesting to an investor, but that also builds that database of information that the decisions and the right decisions will be made throughout the life cycle of the business.
Yeah, and I was going to say, Tom, so in Interact, we started out as a services company, and 15 years later it was services plus platform. But the services aspect of it made us really disciplined in terms of, what our margins look like, our debtors look like, our liquidity look like. So when we came to an acquisition, we were in a really good shape. It can often take companies maybe 2 years to get, in shape for to do their homework and get their house in order. And actually, we were just in really good shape. So when the knock came on the door, we felt actually this was a really good cultural fit for us. A lot of that homework was done, but that discipline was really learned really early on in the early days of the company.
Jennifer, you heard Alison and Eve there. Just to talk about KPIs, like what are the KPIs that you need to be thinking about to have in that imaginary IM or in that actual IM when it eventually might get there?
Yeah, there are so many, but I think irrespective of what business you're in, the size of your business, with your KPIs, you have to start with the basics and get those right before moving on to the more complex ones. And that's probably another kind of challenge that I see, that there's some businesses, try and start with the complex KPIs and don't have the actual basics right first. So as boring as it sounds, your cash and your working capital metric are absolutely critical. Your strategy is going to be meaningless if you don't have the resources in place to fund the growth, and also know when those pinch points in working capital may come, because they may. And, to Stuart's point earlier, you may have to pivot or change strategy and forecast slightly. So you always need to be looking at cash and working capital. In particular for scaling companies, you need to, you and your management team need to be measuring your revenue growth week on week, month on month. Again, to know, are you aligned with your forecast? And if you're not, how is that going to impact, again, working capital in the coming months? And then the third one that I'd say is obviously your profit, gross profit margin, net profit margin, and your EBITDA. Your sales growth is great, but it needs to be converting into profit in the time that you have set out, and at the profit margins that you're planning on hitting. And if that hasn't occurred, you and your team need to know really quickly, because then you can react. You can get under the hood of it, understand what's not going right, and act accordingly.
And Niamh, in terms of company culture, we talk about that a lot, but how important is having, a strong, financial systems within a company to creating its culture and how it does things?
Yeah, I think it's really critical. I think, a lot of it is going to depend on, so from the early stage companies, it can be transformative regardless of whether you're an early stage company or whether you're an SME, at scale, the maturity level is going to change. But if you have, from a governance perspective, if you're looking at accountability and managing budgets and KPIs within, each business unit, versus, and then along with that, then you're looking at, from a value chain perspective. So, we've got sales and ops and HR, and everybody has their own accountability around that. It gives them ownership. It empowers them. And ultimately, if you're all working off the same set of numbers, you definitely have less stress, you have less crisis. You can then have a really focused, empowered team. when I joined the board of, I'll give you a small example. When we joined the board of Lee Lynch's, which was my family's company, it was doing really well, and it was a large SME. But we had set ourselves a target that we were going to add €5 million year on year for the next 4 years. And the only, one of the transformative pieces that we did on that was actually giving additional responsibility and additional ownership and transparency across, all of the business units within it. And anybody who didn't have that capability within the team, then we were able to, go to like Fitzgerald Power, or we brought them in house. We really worked hard on how we were going to set ourselves up for success in doing that, and giving our teams the skills to be able to do that too.
And Alison, East Coast Bakehouse, its sales have doubled recently. Could you talk a little bit about how strategic finance, like what role has that played in that company in terms of being able to hit those targets and to grow very quickly?
Yeah, it's back to what Jennifer was saying in terms of the getting visibility of what growth means for your business, not just at the top line, but what it means all the way down through the right down to net profit level or whatever you get to. But ultimately, the plain fact for virtually every business is that growth eats cash. And you've got to get funding in place to be able to get through that, whether it's your month end or your mid-month, or where are your peaks and troughs, how are you going to manage that? I think the finance function really comes into its own when it's not just counting those numbers, but when it's in a position to really work through the plan of getting out and getting either equity on board, getting invoice discounting, whatever your source of funding is, and working very closely with those very often external funders to really deliver to support that growth. Because ultimately, in fact, again, what Jennifer was saying, growth for growth's sake means absolutely nothing. Top line growth is an ego trip, frankly, unless it's supported by margin growth and sustainable growth. So really, that whole finance function and everybody involved in it is absolutely crucial. And really back to what Niamh was saying also in terms of where the finance function sits within the business. If you've got a finance function that is the one that nobody wants to talk to, and the one that gets blamed for all of the, oh God, he won't give me the money, or she won't give me the money, or wait till the finance department addresses, sees this, you're absolutely in the wrong place. The finance function has got to be integral to all of those other functions as an enabler, as a leader in many cases, but as a partner that brings the right result. And I think that's absolutely crucial. So back to the KPIs within each function should be very much related to the KPIs of the finance, which is ultimately related to the total strategy of the business, that integrated nature of it, getting ownership so that you don't get to a point where you end up with fantastic top line growth and ultimately it's not delivering for the business and building that shareholder value in.
And Jennifer, do you want to come in on that, like just in terms of pitfalls or things mistakes that you're seeing made over and over again, not in the currency, but in other companies?
Ever in the currency. I think we're all, the three of us are saying we have such a similar message from different perspectives. Like to Niamh's point, what gets measured gets managed. And I have seen that in my own day-to-day and in clients. With the pitfalls, like I go back to what I started on, we see startups and scaling companies underestimate or not know. They don't have the internal expertise, so they don't know what good finance can look like. And so that brings real challenges. And what I would say in terms of just the lessons that I could bring to that is, start small, start early, like pre-revenue. Put in your key dates for your management information to be released. And if your team aren't meeting those key dates, understand what the challenges are, why those dates aren't being kept, and try and close the gap month on month. And if you start early, it's so much easier than, if you're trying to grapple with growth and scaling at the same time. So start early. And back to my point, keep your KPIs, small at first, and your management information pack small. Get the basics right. Know your data is absolutely 100% accurate. And then move to the next point of building out that management pack and building out your KPI deck. But definitely getting your key dates right, knowing your management team have to keep to those dates, and making sure your data is reliable.
Do you want to come in on that, Alison?
Yeah, just I suppose it reminds me back to my Dragon's Den days, which is a long time ago, but having so many founders coming in to pitch to us regularly. And one of the issues that a lot of founders had, particularly at very early startup, was the numbers. Many of them would bring in their accountant or somebody with them on the basis of, he's going to give you the numbers or she's going to give you the numbers. And what I would always say to any founder in any startup situation is they're not anybody else's numbers, they're your numbers, and you got to know them to the level of detail that's required to run the business correctly. That would really work throughout the entire management team. If everybody's relying only on the accountant or the accounts function to produce numbers, you're going to be in trouble. So know your numbers at every stage of the business is absolutely crucial.
And is that something that as an investor you're looking for? When you see the pitch deck and the numbers look fantastic, but do you want to see that confidence that when you drill down to the numbers that they can stand over?
Yeah, absolutely. Like, honestly, when I'm looking at a set of numbers, typically I'm reverse engineering those as the first thing that I'm going to do. I look at the story that they're telling me. I look at their what their forecasts look like, and I'm going to reverse engineer and figure out just broadly what this story that they're telling me, does that feed into this P&L, and actually can they achieve these numbers to some degree? We all know that startups tend to be pretty overstated and ambitious, but like, absolutely, to Alison's point, it's a bugbear of mine when you get somebody in and they'll say, I'll hand that over to my CFO. Knowing your numbers is really important. But even if you've raised capital and you're going back out again, you might have raised a pre-seed round, you're going for a seed round, or you might be an SME and you're looking for growth funding. You want to make sure that you've stress tested your numbers. So when you go in and you stand there in front of them and you tell them your growth story and what your ambition is, it makes sense that these figures are really robust, because investors and your board don't like surprises. So I think that's really important to think about. Put yourself in the investor's shoes. What I'm looking for is for you to de-risk this as an investment. For me, we did, the angel investors in H-Man did 17.6 million last year. In the last, they did 86 investments. So it's a lot of work over 12 months. It's a lot of capital going into those companies. And one of the first things that I'm going to be looking at is, when you come in the door, is looking at your figures and saying to me, all right, can you explain to me and reverse engineer those figures? And yeah.
Well, look, I think that's a good point to conclude on. Jennifer Power, Niamh Sterling and Alison Cowzer, thank you very much for your time.
Thanks, Tom.